and gentlemen, the president of the Patriot Trading Group. I'm Joe Jaquint, CEO, president of the Patriot Trading Group. Our toll-free number, 800-951-0592. The website at allamericangold.com. How you doing? Happy hump day. We've got, I'll tell you what, it's going to be another one of those shows. It's going to be, I'm hoping, the best show of the year. Now, granted, it's only been 31 days, but the best show of the year is upon us. We had the State of the Union last. I'm not going to spend a lot of time on it. It was fine. It was long, but it was fine, you know. The bigger news is something, and I've been watching, no one's talked about today. We're going to talk about it here. It's the reason why gold's up. It's the reason why the dollar is down. Again, matter of fact, the dollar closing in on the new lows, back into the 88s. Right now, 88.80. The news, the Treasury Department has been releasing some data this morning, and timing's just perfect, right? We've got the last of the Janet Yellen Federal Reserve meetings. They're going to release the no rate hike thing and set the table up for Jerome Powell. And then, of course, the Treasury Department, we'll update you on just how much debt it really is going to be. It's pretty startling. It really had the dollar under pressure, the 10-year note rising again, 2.74, closing in on 2.75. We'll have to keep our eye on. I think we're going to see Treasury yields above 3 shortly. It's just because just so much debt has to be issued. We'll talk about all of that, and of course the State of the Union. So a perfect time for them to release all of that data. Wall Street trying to recover. Was down over 500 points over the last 2 days. It's up about 130, so well off the high, as crude oil is the top end. Now, that would be something that would be a negative. Crude oil, most people don't realize this. A big chunk of this great GDP has been that crude oil is $30 a barrel more this year than it was last year. But a big build, I think like 8 million barrel build in crude inventories that was released this morning. But a lot of things to go over today. I'm going to call it the dumb, stupid, idiot special. Because you either have to be dumb, stupid, or an idiot not to buy it. That's how great it is. Something never, ever done. And we're going to do it right here today. I'd like to claim credit for it. That, hey, I did this magnificent thing. It was the largest wholesaler in the world sent me a message this morning. This is, if you are looking for older dates, today is going to be your day. And we'll get into that in the next segment. But if you are an older date person, the 1866 to 1876, the oldest 10 years of the Liberty Series, get ready to dial. That's all I'm going to tell you, and you're going to have to move quickly because it wasn't just offered to me. It was offered to just about everybody in the world. But before we get to that, the Treasury Department this morning, facing the prospects of higher deficits, announced its strategy for financing the additional borrowing needs, increasing auction note sizes of more notes and bonds than many Wall Street analysts had forecasted. This is much bigger. The Treasury, in a statement, now they didn't do the big presser, right? You think about all the things that they do on the Billionaire Channel, right? And if it's a job thing and they got 4 or 5 guys out there and any type of big statement, the tax cuts and everyone telling you how great it is, right? Didn't even talk about it, right? They wanted to talk about, hey, Donald stayed on message last night, yay, right? And all that crap. in its statement, the Treasury is going to be adding billions and billions of new issuances in the coming quarter. They said they expect the federal budget deficit to jump by hundreds of billions of dollars in 2018. The Treasury concentrating on the bulk of the increase in issuance on the short end of the curve. Okay, so here's what's happening, really simply put. The Treasury has to announce to all the bond buyers out there how much and how many bonds are going to be for sale over the next 6 months, over the next year, and they just came out with their new, what they already know, right? This is going to be the financing requirements. This only gets them, at least the part that I saw, only gets us through the summer. The important part of this was how they were going to sell them. They're not selling it at the long end, which means they don't really, let's face it, they don't think they can sell them. Right? Because they don't want interest rates to rise even faster. So they said the size of the 2-year, 3-year notes are going to get the bulk of the new issuance. And I'll break down just how much it really is and kind of think about where it is that we're heading. The Dumb, Stupid, Idiot special coming up next.
Everybody says, like dumb, I'm smart.
Thanks, Ramon. The Dumb, Stupid, Idiot special of the year. So we always talk about, the type of gold that we sell here and the reason why, right? We like pre-33 gold, and really, we like gold, right? It doesn't matter, and it does matter, though, what kind. We don't like foreign gold. And not because is there something wrong with Maple Leafs or Krugerrands or Franks or the Sovereigns. No. But we are here in America, and the tax laws are better. And what I mean by that is, we, on most of our customers, I would say 95% of them want to be as private as possible, right? I want to be able to buy it, sell it, trade it, and not have to give out my Social Security number, not have to get 1099. So by default, that puts you into U.S. minted materials, right? Because they have stricter laws when you buy, when you want to sell. You can buy as many Maple Leafs as you want. You can buy as many Krugerrands as you want, but when you want to sell those coins, there are tax implications, right? I have to legally 1099 you. So we stay away from that stuff. Mostly because I'm lazy, right? Then I got to get my accountant to do, my wife's got to worry about it. I just don't like to do it. And neither do you, and it's uncomfortable, and why do you want my Social Security number and all that other stuff? The only other reason why we like the older gold is the last time they confiscated gold, the only gold you could keep were collectibles. That was it. You didn't have collectible gold, you had to turn it in. Right? And, of course, after they turned it in, 90 days later, the price went from $20 to $35. I mean, you think about it, right? 70-some% increase in the value of anybody that had some collectible. When the United States made the Gold Eagle Act of 1985, they said all gold minted prior to 1933 is now a collectible and U.S. minted materials. It's the only type of gold. You can't put it in your IRA. Right? You can put Gold Eagles in your IRA, you can put Maple Leafs in your IRA, you can put Krugerrands in your IRA, you can put a gold bar in your IRA. Right? You can put a kilo bar in your IRA, but you can't put a $20 gold piece in it. Does that mean anything? I don't know. But when you look at, as long as you're not paying huge premiums, sure it would make sense to buy that type. We sell the Liberties and the St. Gaudens, right? And the Liberties are the older ones, right? And we always say 1866 to 1907. And then we tell the story, Teddy Roosevelt thought they were ugly, wanted a more majestic coin, and we got the St. Gaudens and so on and so forth. In that Liberty series, the first 10 years, from 1866 to 1876, we call that the Type 2 series on the Liberties. There's actually an even older series, but those are really expensive. But in this first 10 years, you would know over the years you hardly get any of them, if at all. Some of you out there are like, hey, I've got $120 gold pieces, and none of them are that old, right? They're all 1877 up to 1907. But the first 10 years, the 1866 to 1876, on the what we'll call the tail side of the coin, instead of it saying $20, it just simply says 20D. And I don't know, if making the other letters was going to have it cost more or what, but for some reason, they didn't spell out the word dollars. And they have gotten very different. I mean, you just don't get them. Like, if I order 120s, I'd be lucky to get one or two that are in this series. Today, there's 114, and here's the best part. These aren't the raw ones. These aren't these are the extra fine. This is one grade below AU. So let me explain what it's going to look like. It's going to have the bag dust on it, right? So it'll have like a little, the patina, the black patina. It's going to be in great shape. Don't try to clean them. Don't try to make them look nice. This is they're actually worth more this way. A $20 gold piece right now. So gold's up $6, $7, $13.43. A regular $20 gold piece today is $13.85, and you'd get, like I said, an 1880, 1890, 1900 Liberty. We're going to allow the 20D, the 1866 to 1876. They're going to be $13.85, but if you buy 10 of them, I'm going to throw in a sheet of 10 silver bars. So you can buy 10 of them, $1,385, and get 10 ounces of silver, and it'll still be $1,385 times 10. If you buy 20 of them, I'll throw in a roll of silver eagles. 1 through 9, you just get the 20D coin, $13.85. This is and of all the stuff that we've done a lot of great stuff in the last year. This is the best one. First of all, I've never seen 114 Type 2 $20 Liberties in my entire life. I've worked here for 14 years. In 14 years, I don't think I've seen a total of 100 of these ever. So every one you're going to get, and if you buy 10 or you buy 20, I will give you as many mint marks as possible. I don't know how many that is, but they did say they do have a bunch of dates, a bunch of mint marks, and that they've never, ever in their entire company history sold them this close to the spot price ever. So these are the Type 2 $20 Liberties the 1866 to 1876. So the oldest of the old that we sell, $13.85. When you buy 10, I'm going to give you a sheet of 10 silver bars. If you buy 20, I'm going to give you a roll of Silver Eagles at 800-951-0592, $13.85. Buy 10 of them, will be $13,850. You buy 20 of them, $27,700, and you get the silver on top of that. Getting back to what we are talking about and what's happening today. Why is the 10-year note running? Why is gold running again? Why is the dollar doing what it's doing and falling again? It all had to do with a spreadsheet that was released by the Treasury Department this morning. Well, everyone is trying to figure out how to twist the new tax cut. The U.S. Treasury Department just announced how much new debt it's going to have to sell to the public over the next 5 months. The number, $617 billion. That'll increase the national debt to $21.1 trillion. Right now, technically we've hit the debt ceiling again at 20.5. They're going to increase the debt in the next 5 months by over $600 billion. Listen, you can do simple math. Right? That means a 10-month period is 1.2. We got another couple of months. I mean, you're looking at debts now somewhere closing in on $1.5 trillion. The Treasury Department has now added notes saying we have to increase issuance of 2-year, 3-year, 5-year. They're talking about now issuing a 2-month note, something that they don't offer currently, to try to stop up all of the extra issuance that it's going to have to do. During Q1, the Treasury expects the United States public debt to increase by $441 billion. That'll put it, we'll hit $21 trillion by March. During Q2, now Q2, tax season falls in there, where the revenue comes in. Even with the revenue, the Treasury announced it will have to issue an additional $176 billion worth of debt. It also makes an assumption that it will have a balance sheet, right? So they can have a balance sheet, because you know how they say, oh, well, our balance sheet will allow us, once they hit these debt limits, of about $300 billion, which will probably give it, 6 months or so on debt ceiling. They anticipate the new national debt will stand at over $21 trillion before the end of summer. And just to put this in perspective, in 2007, the national debt stood at 63% of GDP. By 2012, it was 95%. By the end of last year, it was at 106%. And now we're talking about a national debt that is going to start growing, at least from the Treasury's announcement today, a national debt that's going to grow by over $1.5 trillion in real money and real issuance over the course of the next 5 months. Then the Treasury released 2018, 2019, 2020, and 2021. And here's where the numbers came in at. 2018, $1 trillion to $1.2 trillion, depending on if you want to count the Federal Reserve or not. 2019, 1.1 to 1.4. 2020, almost 1.2 to 1.4. 2021, 1.3 to 1.5, and that's the good number for the Treasury Department. So according to the Treasury, they're projecting that we will hit $1 trillion this year. Remember, we've been talking about how we're supposed to hit it next year. And the reason why you saw the dollar down again, the Treasury is piling the debt on the shorter part of the yield curve. They're trying to keep the rates lower. It's not going to work. And these are all the best case scenarios. They're adding $2 billion to every 2-year and 3-year auction. That's just in February. $1 billion increase on the 5, 7, and 10 years, and the 30-year notes, and new issuances, total adjustments, another $42 billion in net new issuances, on top of tip auctions and other auctions. It's the Treasury market gone wild.
This is the Phyllis Schlafly Report, the conservative pro-family broadcast of Phyllis Schlafly Eagles, a leading voice for the sanctity of life, traditional education, the Constitution, and American sovereignty. And now, from the archives of Phyllis Schlafly Eagles, here is Phyllis Schlafly.
Feminists have been claiming that certain words and phrases are discriminatory, but a recent feminist list takes the prize for silliness. We've heard for decades that it's wrong to mention only the male gender. There's nothing new about feminists demanding that we use the clumsy he or she or replace chairman with chairperson. But now they've broadened their complaints. The phrase, you guys, is now discouraged at Macalester College, where students are told that such phrases have an oppressive impact on our culture. Duke University launched a campaign against Man Up, which supposedly implies that only men can be strong. And we've now been told that even the phrase Founding Fathers is sexist because it refers only to men, even though we all know that all the Founding Fathers actually were men. It used to be that you could avoid the scorn of the feminists if you mentioned both genders, but not anymore. The Women's Media Center says that even husband and wife and men and women are problem phrases unless you make sure to alternate which gender you mention first. Ladies and gentlemen is also out. The correct word, surprise, surprise, is gentlewomen. Other words are forbidden not because they themselves are sexist, but because they're supposedly used more often to describe women, and that's said to be degrading. Examples include aggressive, feisty, opinionated, and spirited. A simple Google search shows these words are used just as often about men, but the feminists take offense anyway. The feminists spend a lot of their energy attacking men as unnecessary and oppressive. They demand that we overthrow what they call the patriarchy. On the other hand, it obviously is pretty easy for feminists to claim they have been offended.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. You've seen the desperation of women's marches, the disgrace of Planned Parenthood, the rise of savvy young conservative women. Radical feminism is heading down a dead-end road. Voice your opinion on what's really important to women at phyllisschlafly.com. That's phyllisschlafly.com. Thanks for listening, and join us again for the Phyllis Schlafly Report.
800-951-0592, the $20 Liberty, but this isn't your average Liberty. These are just a 10-year window, 1866 to to 1876. They're not going to last long. And these are going to be extra fine. $1,385. What makes these unique in this 10-year period, on the tail side of the coin, they didn't spell out the word dollars. It's the weirdest thing. It just says 20D. And they only made them for 10 years. And, you know, when we talk about the liberties, we always say 1866 to 1907, you very, very, very rarely ever get those first 10 dates because there's just not that many of them. And a lot of people like to collect them because they're hard to come by. So today there was 114 of them available. $1,385. That's like $42 over spot. Just that alone is good enough. But if you want to buy in volume, I'm gonna make it even better for you. Right? You buy 10, I'm gonna throw in a sheet of 10 silver bars. You buy 20, I'm gonna throw in a roll of silver eagles, all at the same price. 800-951-0592 of all the special. You know, let's think about it. We sold gold at spot the other day. This is better. But you're like, hey, it's $42 more, but it's the 20 Ds. You just don't get them. You know, I've been here for, 14, 15 years. I've never seen that many. Never. One guy, one time, I think there was 10 of them, and he bought them. I saw 10 of them at once. It was the only single time that I saw more than one or two in any one time. 800-951-0592. If you're on hold, just sit there. We'll get you in the order that you called. There's still two lines open. 800-951-0592. You know, I've got a handful of people that I love, right? And I tell you about them, and they're my favorite guys. Jeffrey Gunlich, who is probably of all of them, I think one of the best, right? Stanley Druckenmiller, right? Charles Bitterman, right? Those three guys are the guys that I pay attention to. Yesterday, and actually last night, my guess is, you know, he's one of the bond gurus out there talking about gold. The gold chart is going to break and break higher. Famed investor and bond king, I guess he's the new bond king now that Bill Gross isn't there anymore, Jeffrey Gunlich, believes that commodities are going to be one of the best buys of 2018, right? Reiterate, Goldman Sachs said the same thing. The gold chart looks a lot like the commodity chart, like it's pacing out, about to break higher, and the dollar is only getting weaker. I think you stay with that systematic positioning. I've been recommending gold for the past couple of years. Of course, he's the head of Double Line Capital. He did a webcast yesterday talking about commodities and gold. A lot of people think commodity prices shouldn't go up late cycle because the Federal Reserve is tightening, right? And remember, we talked about that exact same thing yesterday. But it's the exact opposite that is really true. Some of the main reasons to invest include diversification and hedging against inflation, low to uncorrelated returns to traditional asset classes. Physical assets have historically tended to move in line with broad inflation measures. Dollar cycles are persistent and fairly predictable. Remember, that was the thing that we talked about last week, right? The dollar cycles are very, especially over the last 50 years, are very, very predictable. The pattern is very clear, and it's something where we're in this cycle, right? We're in the next leg down. We've got a lot of, and now the Treasury today, the announcement today has kind of gotten the market a little on edge as they talked about how much debt was going to be have to issue. Now they're saying that they may have to create some new short-term notes, talking about a 2-month note to try to soak up the demand, trying to figure out what to do with all the supply. The Treasury sell-off continues. The 10-year note today hitting, I don't know if it's gotten to 275 yet, real close, 274 and change. The Treasury trying to keep the long end of the curve in line. They don't want to, they're trying not to add too much debt to the long end, because when you have too much, what happens? The bids get up, right? You got to pay more. You got to bribe them, right? The bribe's got to be better. The interest has to go up. So they're going to try to do the bulk of the new issuance in the shorter-term debt markets, primarily the 2- and 3-year notes, talking about adding a 2-month note as well, not to mention the size, which for me is the big number. $614 billion is going to be added to the national debt in the next 5 months. The Treasury Department says trillion-dollar deficits start in 2018, and at least as far as their curve went. Right? They only went to 2021 on the release. We never. Put it this way: it never comes down. And it's just going to keep rising, which is going to keep the sale at the back of gold. The 10-year note, just checking here real quick, 2743. 2743 right now on the U.S. 10-year note. Gold's at 13 right now, 1342. Silver is up 19 cents today at $17.25. Type 2 $20 liberties. The dumb, stupid, idiot sale, $13.85. These are the first 10 years of issuance where they did not spell out the word dollars. These are XF quality. I mean, so you're going to get great-looking material. $13.85. Oh, just that on its own is a great deal. If you buy 10 or more, you get a sheet of 10 Silver Eagles. 20 or more, you get a free roll of silver. 800-951-0592. We'll be back right after the break. Don't wait too long. 2 lines open. The dumb, stupid, idiot sale. The 10 oldest dates of the $20 liberties. 1866 to 1876. XFs, which is extra fine, that's 1 grade below AU. It's gonna have. I think it's the best because I like a little bit of hey, the coins are great. They're in great shape. The thickness and all the details all there. Then they usually just have the what I call the bag dust because they were sitting in these bags for who knows 100 years or longer. Then they're just awesome, and to get the oldest of the old. But like I said, in my whole 14, almost 15 years here, never ever have I seen this many. 800-951-0592. They're $1,385. If you buy 10 of them, I'm going to give you a sheet of 10 silver bars. If you buy 20, I'm going to give you a roll of Silver Eagles just to incentivize you. That's why I call it the dumb, stupid, idiot sale. It's just awesome. 800-951-0592. We have Janet Yellen's last meeting. That's the other thing we haven't talked about, right? The Federal Reserve, right, is trying to wind down the balance sheet. I guess we'll get an update on that as well. I wonder if the Treasury has that in the number. Right now, they're doing $10 billion a month, but they're supposed to be ramping it up 20, 30, eventually, going to get to $50 billion. That may be off the table. I don't know, but we'll have to wait and see. They're meeting today. No one's expecting anything as it's Janet Yellen's farewell meeting, and Jerome Powell will step in February. I guess he'll be in place for the rate hike, will they or won't they? Because February is one of the ones where they have the press conference. That's how we do it now because everything's made for TV. So Janet Yellen's last Federal Reserve meeting, there is no press conference after the meeting, so I don't know. I mean, we'll get the no rate hike, and maybe they'll say inflation is picking up. I don't know. By their points, their data points, it actually hasn't. But by everybody else's measures, inflation seems to be rising as I guess we'll have to wait and see. But the bond market today reacting very heavily to the news on the U.S. Treasury Department. They released the bond schedule and how much U.S. debt needs to be auctioned off. And this is kind of the first time that I can recall where there's been this much attention on the issuances because the increase is so dramatic. And the problem is these increases, and the Fed has laid out, like I said, they've only laid out the next, 3 years, 2018, 2019. No, 2018's now, and then 2019, 2020, 2021. And just like I said, the issuance numbers are elevated. They continue to elevate, and then you start thinking about what's not in there. So here's what I don't know about the Federal Reserve stuff, if that's in or out. President Trump in the State of the Union called on a $1.5 trillion infrastructure plan. Right now, we spend $60 billion a year on infrastructure. That's current budget funding. So every time they do a debt ceiling extension, they're extending that $60 billion. He's calling for $150 billion. So a $90 billion a year increase. That's not it. Defense spending. Right now, again, we just are continuing the level that was set before Trump came into office. He's looking for an $85 billion a year increase on defense. If he gets them both, which I got no reason to believe that he won't, add another $175 billion a year to the issuance. Then if you have a spike in interest rates, which it appears like we're going to have, you're probably going to add another $200 billion of issuance. Right now, all of a sudden, that's $375 billion more dollars. And then you add in Social Security and Medicare, right? Every single year, those two programs add about $100 billion. And you see how quickly we are going to hit the $2 trillion number. And remember, the Treasury, when they release this number, that's not the bad number, right? They still don't count all the people we give college loans to that have no chance of ever paying it back. I mean, what do they say now? 40% of all college loans are going to be in default by 2021? 40%. Right? They don't count any of those in these numbers as well. So the U.S. Treasury Department loading up on debt, loading it up on the short term as well. And I think that was key because, remember, I think Mnuchin at one time talked about a 50-year note, which never came to fruition. And now they don't want a 50-year note because they don't want to drive up the rates. And, I don't think it really matters whether they did it to the long end or did it to the short end. The fact of the matter is, and here's the problem with doing it to the short end. As rates are rising, it gets even more expensive because you got to turn that debt sooner and sooner and sooner. The 20 Ds, the oldest of the old Liberties, the first 10 years of issuance. 1385 800 951 0592. This just in, the Treasury Borrowing Advisory Committee. Who knew there was such a thing? Says that there is, and I quote, substantial interest in introducing a 2-month Treasury bill. The committee also said that they could add a 5-year Treasury inflation-protected security as well. So don't worry, they got plenty of ways to issue a bunch of new debt. How do they know? Well, how do they know? I'm sure they've been talking to, right, Jamie Dimon and the guys at Goldman. Hey, make sure you come out and say good things about this and how it's going to be fine. It's going to be different this time. Don't you worry. We can issue as much debt as we want. Taking the shine off of the Dow. The Dow was up at one point something like 250. It's now down, it's still up, but only up about 120. The S&P's up 2. The Nasdaq is up 8. Gold's up over $5 and change. Crude oil still only down 29 cents. The first build in crude supplies in over a year today, according to the data that came out. The oldest of the old, the U.S. $20 Liberty, what we call the Type 2 in the industry. This is the 20D coin. They didn't, maybe the guy didn't know how to spell, right? He just said, 20D. So the first 10 years of the Liberty series, from 1866 to 1876, they all said 20D, and then after that they spelled out the word dollars. 1385, and these aren't just your ordinary, these are XFs. 1385, if you buy 10 or more, we're going to throw in a sheet of 10 silver bars. If you buy 20 or more, we'll throw in a roll of silver eagles. You just can't beat it. I'm calling it the dumb, stupid, idiot sale. 800-951-0592. The 20D, $20 Liberties at $1,385. Later this afternoon, we'll get like I said, Janet Yellen's last meeting. No one's really expecting much of anything. We'll set the table there for Jerome Powell to come in. And then outside of that, we had ADP out today, 234,000 jobs created. And they've been running. Last year they ran about 50,000 more. It's a survey number. So we're probably going to get about 180,000 jobs tomorrow or Friday. Tomorrow we'll get jobless claims first week of the month. So we'll have government jobs data out on Friday. So a lot of things to pay attention to. The State of the Union, like I said, I hate the State of the Union because it just shows how childish our elected officials are, and we can't even come together for a single night to show unity. But neither here nor there. I think the biggest pieces of that State of the Union had to do with spending. So what the Treasury just announced today, on top of what Donald Trump announced, if he gets it done, we're going to see deficits that are going to be. Well, they're going to be big no matter what. But the Treasury, new issuances, we may have a 2-month bill, a 5-year bill. I mean, we could have all kinds of new Treasury issuances. Get your gold. Remember, it hedges you against that stuff. 800-951-0592. Everyone take care. We'll be back tomorrow.